you are not educating yourself about the housing and real estate market, whether you're in the mortgage business, insurance, title, financial, accounting, you're doing yourself and the public a disservice. This is episode 3 of the Knowledge Brokers podcast. I'm Tom Toole. We've got Byron Lazine here. And Byron, I am a positive Pete today about what's going on in the marketplace. We're seeing applications up. We're seeing rates come down. What's your feeling heading into the end of January?
This week has been very optimistic with a lot of the reports, and we made it to episode 3. So I'm glad to see that you came back here, Tom.
The week-to-week contract is still renewing every week. We'll see how the next 45 minutes go.
Yeah, mortgage applications went up 28% from 1 week earlier, according to data from Mortgage Bankers Association for the survey week ending January 13th, 2023. It was like a light switch January 1st with buyers just coming out. Mm-hmm. Listen, we know that the largest buyer demographic is millennials. And at some point, they're just like, we're going to buy a house because life is dictating that we buy a house. And so, listen, I think this is going to be, housing's in a tough, it's in a tough spot in the sense of what's going to happen throughout the rest of the year if, this type of demand, and we're going to talk about like what we've seen, come off of this demand this week. What's happened since this demand has gone up 28% in mortgage rates with the inventory that we do have. If this continues, prices could get inflated again pretty quickly. I know there's, you can point to Goldman Sachs, which says we're going to have a 10% drop or 4% already. According to them, they say we got 6% more to go nationally in terms of home values. Moody's just came out. They're projecting 5.1% in home values. Zillow's a little more bullish. They're just over 1% drop in home values. Can't find too many that say we're going to see an increase in home values. I hope we get into like that. We're going to get into it, obviously, with some of these multiple offers that are just swathing across the country right now and what that could potentially do to prices. But listen, mortgage applications have been down considerably, and for good reason. People just took the fourth quarter off when rates got up over 7.5%. Let's see what happens. If we don't have to move tomorrow, maybe I'm a buyer. I can just see what happens, right? Mm-hmm. And so we saw a whole bunch of that, and now they're back down to 6. A lot of people, I think you have some examples we were talking before of people getting in high 5s. I've seen that as well. And now you got a whole bunch of buyers back out. Also, you just see, but mid-January to call it mid-May, this is when the bulk of mortgage applications happen traditionally, if we're just looking seasonality. So there's that too.
Yeah, historically at our firm, we've charted this back since the mid-'80s, and we do roughly 60% of our business between January 1st and June 30th each year, and that's pending home sales. So when the date that the home gets signed and goes under contract, and there's some things in the Northeast.
And that's not a small sample size. It's over 500 homes. So
yeah, it's more than that. That's the brokerage. That's not even just us. So
okay.
So that's our entire brokerage. Right now we've got 90 some agents at our brokerage. Our team makes out about a third of that, a little more than that. So we see that historically, and we are in a very seasonal market. And this is the challenge for a lot of real estate agents. They're not used to a tough January or a tough February, given what's happened with the COVID pandemic and how the market accelerated so much. And when these rates came down, and it's like that 1999 pricing strategy. When they came down below 6, people got excited. Even last week when we saw that happen, we started here at our team sending out rate charts, showing people how much money that their housing payment would drop based on that adjustment. And that got people excited again because, to your point, these millennial home buyers, it's the biggest generation since the baby boomers, and they're going to drive the economy for decades, and a lot of them still haven't bought homes. And because of that, and we're seeing first-time home buyers make a comeback. There was a BAM article along with Realtor.com towards the end of the year that first-time home buyers in 21 made up about 37% of all the transactions. Now it's trending closer to 43 to 45%. So those are the millennial home buyers, and they're paying rent. So they've seen inflation hit that. It's not that I've got a 3% rate and I need to figure out how I'm going to keep that rate, so I'm not going to move. So the demand's not going to go away. And the multiple offers we're seeing, Byron, I'd love to hear your case studies. I charted out 3 of them here. It's right at that like move up sort of slightly above average home sale price. There's always that meat of the market where the market moves, and in our market, it's typically been that $300,000 to $600,000 range in the greater Philadelphia area. Our average price right now is about $425,000, so it's kind of that plus or minus the average. And you look at income demographics and do the 4x multiplier to see where those prices are going to come in any market. We saw a home that had 20 plus offers over the weekend, and it was on a busy road. That one was shocking to me. I grew up not too far from there. We've seen properties that they've been on the market a couple months. All of a sudden, they make an adjustment. Rates come down. 5, 6 offers come in. Even in neighborhoods where people tend to want to move out of when their kids get school age, we're seeing multiple offers in those situations as well. And we've had to train our folks. And this goes for the consumers listening, the mortgage brokers listening, because they're giving advice, and the real estate agents, obviously. You've got to have that multiple offer mindset right now. You've got to approach every single offer you write as, hey, we got to get this locked in as soon as we can. Lock in your word of 2023. And more importantly, ask the right questions and prep these things. You can't just send the offer over and try to negotiate. You've got to know what you're doing for your clients, because if you're not doing that as a real estate agent, then you're not doing your job. Every single agreement, every single offer should have a multiple offer mindset around it, even if they don't exist, because another day or two on the market, you never know what can happen.
If you asked me in November and certainly in December, if we'd be talking, I mean, the conversations you and I were having on our calls and in our text groups, like they were not about how to prepare the spring for another multiple offer rush. But here we are in January 2023, and we're back to spring market, not totally back to spring market 22, but we're in extreme multiple offer situations. There's many examples across the country that we can point to. And the reasons are, okay, interest rates went down to 6. There's a whole bunch of examples you gave, and I could point to where people are getting in the 5.9s. I said it on the Real World podcast, 5.9 is a lot more sexy than 6.01. Mortgage News Daily just yesterday was at 6.11. Day before that was 6.04 for national average. So the confidence in the rate has gone up. Buyer confidence is up. We saw applications go up 28%. Homebuilder sentiment is up. So everybody's confidence is up. But what that's creating to me is a little bit of a scary situation. And you're seeing it right now on Facebook. You're seeing it on Twitter. You're seeing all these examples where agents are saying things like, and I'll just read a couple of them because I have some of these pulled up here. Actually, here's an agent that works on our team in Connecticut. I consider myself a pretty productive agent. This is Tina. But this week I've wrote more offers for multiple buyers than I have in the last 2 months, and all have been in multiple offer situations. Some of these homes, Tom, could have made an offer, but in the only offer in December. And now you're competing against 5, 10, 15 other offers. This is a Facebook post. This Connecticut market is getting wild again. Okay, here's what I would call the dichotomy of housing markets. Keith Wasserman says lots of price reductions in my inbox. Well, depending on who sees that, they're thinking prices are dropping on single family homes, but no, he's a multifamily investor. Jay Pitts replies to him. Jay Pitts owns a Remax brokerage in Kentucky. He's a unit mover, moves a lot of property at the median price point, or maybe lower if you're trying to.
I'm a client of Jay Pitts, so I mean it's the median for Louisville, Kentucky. Let's put it that way.
The median for his market. He writes lots of highest and best counters in mind. So there's another, and he's a big time broker. He's got a lot of agents, and so he's seeing a lot of multiple offers. He says it. Danielle Levy on Twitter, I retweeted her. The listing under market value is working again, right? The strategy we just talked about, the strategy maybe not working
a week ago,
but now it is in certain price points. A friend of mine sent me a screenshot that the realtor is requesting 24-hour irrevocable, and they received 27 offers. We talked about it not working in. You're not going to do that in maybe this higher price point, but certainly in these medium price points, it is working again. And so rates don't seem 6%, high 5% interest rates don't seem to be the issue for the housing market. What seems to be the issue is this incredible lack of inventory. And you keep seeing, hey, inventory's up, 55% year over year. Inventory is on the rise. We're at just over 1 million homes available on the market. Remember, normal amount of homes on the market trends between 2 and 2.5 million. This is not 2005.
Mm-hmm.
2005, you're talking about 4 million homes on the market.
Yep.
So for everybody that thinks prices are going to somehow fall off some cliff, they're very confused about the dynamics of supply and demand. It's why we're seeing all these multiple offers. And to me, it scares me, Tom, because if we get this inflation of home prices again this spring, I just fear that the Fed is going to do something dramatic. They're going to do something so far the other direction that puts too many people out of jobs, that jacks up these rates too far in one direction, well over 5. And that, because they want to get housing under control.
Yes.
They don't like, I promise you, they don't like what every agent is posting on Facebook and what every agent is posting on Twitter right now about these multiple offers. And actually, Tom, for the consumer, I don't know if it's a good post either. Because if the buyer missed out last year and the year before, does that not instill fear?
There's an issue with this, and we've talked about it for the past 2-3 years, where agents are preaching doom and gloom, and hey, this is a crazy market. Well, I don't like crazy when I'm investing hundreds of thousands of dollars. And to your point, I mean, even if we were to get back to 2019 levels, which was a competitive market, and that was a range of 1.52 to 1.93 million, and that was a great time to sell real estate for sellers. So there's a ways to go here, and with rates coming down, not a bad thing, because that was the big challenge we saw in the fourth quarter. I can speak to that personally. I know we've talked about it offline here. You can sell 5%. 5% people are going to be okay with, and I mean anything that has a 5 in front of it, a 5 handle. When you get to 6 and 7, that's where people get a little nervous, and as a result, now we're seeing rates come down, and a lot of people are afraid the Fed is going to do something drastic. And I personally don't trust where the Fed's going with this. Logan Motoshami, our boy at Housing Wire, he has said the same thing. The Fed needs to reset their policies, and I just don't know if they're going to do it. If you look at the CME Market Watch tool, we've got 12 days, 3 hours, and 22 minutes until the next Fed meeting. And the likelihood of the 25 basis point increase has risen from last week to now to 97.2% and a 2.8% chance they go 50 basis points. I think that makes sense for now, but if they continue with this, they're still targeting inflation, and we've seen CPI data obviously come down. So the multiple offer situations that are here, I remember vividly we're having conversations with like Greg Schwartz at Tomo and talking, amongst ourselves about how do we have like portable rates for buyers? Is there a way to solve for that if they have a home with a 3 in it? But when the rates came down, it was a non-issue. Everyone thought assumable loans were going to be a thing, and those people, they had no interest. They had nowhere to go. So the housing inflation that we're seeing is causing some hesitation. And I'm clear real estate agents, mortgage brokers, title people, everyone involved, and there's a lot of people that touch the industry, you need to watch your language and reset how you're talking to folks, because you're going to scare people away. And it's more clickbait, but it's coming from a local expert, and it's just regurgitating these nonsense headlines, which are causing people to pull out of the market. Sellers in particular.
One of the issues, right, is that if I'm somebody who wants to buy a house, I have this belief that prices are going to drop in my favor, and so I'm going to continue to wait. And if you're an agent on the other side, the issue is saying no, you should buy now, because I don't see any drop in prices happening. You keep waiting. You sound like a sleazy salesperson, right? You don't sound like you've got their best interest, because they're like, no, prices have to plummet. I mean, there's been many times you can point to where a 1% interest rate provides like a 10% drop in home values. We had 3% interest rate. You didn't see any of these prices move, right? I mean, if you've got 31 plus, we hit that debt ceiling the other day,
Yeah,
Tom. I don't know if
I did see that.
If you saw that. If you got $31 trillion in debt, I don't think you're going to get a $120,000 house.
Yep.
I don't think you're going to get a $120,000 house on the land in the country where you got $31 trillion, usually these assets continue to just inflate. I don't want to see a spring where we get completely out of control. To me, the only thing it's now clear, man, or maybe it's not that clear. Maybe the Fed says, all right, we're going to give you what we gave you, housing market in June. We're going to go ahead and jack this thing up back to 7.5%, because clearly at 5.9, 6%, the multiple offers are back, and we don't want housing to inflate. This is why it's so important for buyers to understand that this may be a moment in time. I can point to hundreds, it seems, forecasters saying prices are going to drop, but that's only because interest rates are going to, there's a lot of people that believe interest rates are going to go back up, and they're not going to stick at this high fives. What are your thoughts, Tom? Do you think the Fed January 31st, February 1st looks at multiple offers, this anecdotal evidence happening across the country, and says, we're going to jack this thing up 50 basis points. We're going to go back to 75 basis points because housing is our biggest concern?
What I know is that Jerome Powell has been targeting housing. I mean, I've heard in no uncertain terms. He didn't come out and say these exact words, but back last year, hey, we're looking to crash the housing market. That was the message I got, and a lot of people heard the same thing. And I wouldn't be shocked. I mean, just because the CMA or CME FedWatch tool says 97%, if this continues, this could drastically change. The inflation data is down, but it's down like 0.1%. It's not. We're not talking like major numbers here, and they're looking for 2%, right? And we're at like high 6, low 7, yeah. So that's where we've been coming down from. So the anecdotal evidence could cause a problem, and at the same time, there's this challenge that's out there where I know I chart our listing appointments we go on every week. And then this is a small sample size, but I've seen listing appointments spike internally. I don't know what you're seeing at the one team. And there's folks that are talking about putting their homes on the market. And another realtor issue that exists is wait to list your home until after the Super Bowl. And you're talking about a moment in time. If I'm a seller right now, this may be that moment in time, right? And because you're still if you're getting multiple offers in the high 5s, low 6s, well, that's going to help, because then you can start seeing waive contingencies and some of those terms that are super valuable for some sellers. The settlement date you want. We talked last week, one of the biggest stressors for home sellers, over 50% of them, is timing the sale and making it a smooth transition. So the rhetoric and the stuff that realtors always say has got to change, or at least the ones that want to be successful and really help people, because this is a moment in time right now for sellers. And I'd be telling every seller I'm talking to, move up your time frame, because we don't know what's going to happen with the Fed. And I'm not a big fan of gambling with the equity in my property and one of my biggest assets.
Tom, I was talking to a former Zillow exec, big time CEO at a real estate startup right now. I won't say his name, but you and I both know him. Okay. And I was talking to him this week. He said that it is shocking how many real estate agents are undereducated on simple, basic terms. Like, the whole 10-year conversation, right? It's just like, I'm looking at the 10-year yesterday. It's going up. I say, okay, the interest rate's going to pop a little bit today. And it did. It was like automatic, right? And just these basic things that far too many agents aren't having conversations about. And one of the biggest conversations lacking right now is what you just touched on. The people who are, I'm going to sell my house in the spring, and they're not getting all the information of why right now they're actually going to make more money in January and in February than they likely will in April and in May. Mm-hmm. We're at near peak prices in most markets, and they're going to be able to capitalize on those comps. Now, I was talking to our friend Jill Biggs this week, and she's like, Byron, we got to remember, people don't even know what comps mean when we're talking about the public. So when we're messaging to the public, when we're messaging to sellers, it's got to be really basic, right? You will make more money listing your home in January than you will listing your home in May. then you have a conversation, right? You get into a Zoom, you get into a phone conversation, you get into the dining room table with this homeowner, and you lay it all out there for them. Here are all the projections that we don't know what's going to happen to the interest rate, but there's a whole bunch of people saying it's going to continue to go up because we have to stop the inflating housing prices. Here's Goldman Sachs to everybody else that says home prices are going down, because the reason they're saying that is they intuitively believe the Fed is going to do something else dramatic. They believe that, which is why they're projecting that these home prices go down, because it doesn't make sense when you have 1 million houses on the market, when you need 2.5 million. Supply and demand doesn't make sense that home prices will go down. But there's a strong belief. Larry Summers says the great tragedy would be if central banks don't finish the job on inflation, right? He just said that this week on CNBC, former U.S. Treasury Secretary. People want to see them go across the finish line, go up over 5.5% on the federal interest rate. They want to see this mortgage interest rate go back up. And there's people at the Fed that want to see people lose jobs. All of this impacts what happens later on in the year.
Yep.
If I'm going to sell my house in the spring, I'm doing it in the winter and capitalizing on the highest price possible in 2023. So Tom, let's actually build an ad right now. What would be a simple way to put this out? And I was doing this with Jill, so I may not have the perfect answer. I don't have the perfect answer. I was doing it with Jill. Like, what's the perfect ad we can put out there into the market that speaks to sellers to get them to understand we're not looking for a listing, but right now, with where inventory is, with where home purchase applications are up, and with where, buyer confidence is up because of the interest rate, it's a perfect storm all of a sudden again. If you're a home seller, which it wasn't in quarter four,
Was not.
What's the ad look like? What's the simple communication look like for a seller to have a deeper conversation?
So I'd love the audience to drop some comments what they think the good ad copy would be as we go through this. That would be a great way to kind of outsource this. So let's think about pain points, right? It's prepping the home, timing, getting the price you want. Those are the three biggest pain points. And timing can be broken down in a lot of ways. We talked about this last week in that NAR Zillow study that comes out every year. So I find the bigger challenge for most sellers is how to prep their home. And the people that are thinking about moving, they've been in there too long. So that's got to be part of this here. And additionally, you want to look at market conditions. So it's more of, have you been waiting for the perfect time to cash out high? Like, I think that it's got to be something along those lines, and just get them thinking. And then, or have you been waiting for the ideal time to max the proceeds of your home? It's got to be broken down into stuff they can understand, to your point. I don't even like the word equity because I don't think some people know what that means in some cases.
Right.
So do you want to cash out high on your home? Like that could be that could be the ad copy. Obviously, we know a lot of people that are smarter than us that could help us come up with this, but are you worried about prepping your home for the market? We've got a solution. Are you worried about timing the sale of your home? We can plan it out on your ideal time frame. Something along those lines. Those need to be the headlines. And I'd love to hit up someone like Jimmy Mackin or some of these other people we know in marketing. They could probably help us with it. It's got to hit the pain points.
Yeah, the solution for prepping your home for sale has just been uncovered.
Yep, that's really good.
Right? And so, because here is the solution. In reality, you're at a perfect storm. You can dictate terms. I mean, if you're in one of these situations that we just outlined where you're, again, in 15, 20, 25 offers, well, you can pick the terms and get the time you need.
Yep.
There's your solution.
Yep.
You get 3 months on the closing instead of 2 to be able to help facilitate that move. Yeah, I mean, we're just anecdotally, Tom, and I'd love to hear comments on it. We know Phoenix, Vegas, these types of markets are increasing in inventory, and just the last week, which is a good thing. And I agree with, like, we love the Housing Wire market tracker, which comes out every single week.
Yes.
I agree that this last week, having 1,339 homes, a slight increase in inventory, is a good thing. We need a whole lot more than that, though. And right now, this week, we're at 471,000. Rose from 471,349 to 472,688. And we're not in a drastic situation like last year, 292,000 to 283,000. But overall, I mean, being at 1 million, and this is in the market tracker, NAR total inventory data is currently at 1.14 million. We're supposed to be at 2 or 2.5 million. We need to double up again just to get inventory at a normalized level. We have no shot of getting anywhere close to 4 million like we saw in 2005. Not that that would be healthy, but we need to double up in inventory. Are you bullish on like your market that you're going to have a double up this spring?
I'm not. We're not in a market that sees a ton of new construction unless you get outside of the core metro area. So you're talking about, Philadelphia's got 4 counties outside that we service: Bucks, Chester, Montgomery, Delaware. You got to go to like Lancaster. Like the Amish people live out there, right? So that's the kind of place you have to move to. And since we don't,
Maybe not so bad.
Maybe not for some people. I don't like driving a lot of places, so I have a different view. And that can work for a lot of folks. They are going to go far, and some people just want a new home anyway. If you look at, I think new construction backlogs are an issue in the Northeast especially. And we see a lot in Philadelphia. Philadelphia's inventory is dramatically different than the counties, where they're taking empty lots, repurposing industrial buildings. Some of these neighborhoods that are getting gentrified, where folks wouldn't feel comfortable living. So that inventory has climbed to close to almost 5 months, Byron, over at the end of December. So we're seeing that market's a lot looser. I am not bullish on the suburban markets. I think a lot of people have valued suburban homes more. We saw that during the pandemic. People want outdoor space. They want some elbow room, and that's not changing. And especially you look at millennial home buyers. You know what millennials are doing right now? They're forming families. They're not looking for that urban living where you got 3 kids in a 3-bedroom, 1,200 square foot row home. I mean, that sounds like a nightmare to me. I've got 3 kids. I need like 1,000 square foot per person just to have some alone time. And that's the reality of what a lot of people are seeing. And these folks are forming families. And part of this challenge that we've had is, you look back at the history of millennials, and they're no different than the boomers who drove the economy for decades. They didn't buy houses earlier in their life. The baby boomer generation, like my parents, they're buying homes in their late 20s. They were getting married earlier. Now, because family formation has changed, and you're seeing people not get married until their 30s. They're having kids in their mid-30s, which is considered a geriatric pregnancy at this point. I'm dead serious with you. I mean, this is all – look at how things have changed. I don't see more inventory coming on the market because people are moving somewhere, and the millennials are kind of jumping that first-time buyer product, and they're going into, hey, I could live here for 20 years. And that's the most competitive part of the market, is the 20-year property, that move-up marketplace. And that's where most of the homes sell anyway.
Yeah, and the problem with that, having such a big demographic of home buyers, I love this tradingeconomics.com. I sent it to you in a text earlier. Because there's all these different categories on the right. You can go to whatever you want: home ownership rate, mortgage applications, mortgage rate, all these different things. But the inventory one is fascinating. That it's been a growing problem for really all of 12 years, 13 years, where the you can just draw a straight line from 2012 to today. And inventory is continuously declining. Well, when you have this huge demographic of millennials that have to make a decision, have to move, have to start need a single family house, all those single families are not available. They're just not for them. And so builders can't keep up. They couldn't even keep up the last couple of years when we saw a little bit of pop in housing starts. Housing starts are down at a really low level. This is, to me, the biggest issue. Obviously, if interest rates went to 10 or something, lights out Irene, but that's a whole different discussion. And I think that I honestly, I'm starting to talk myself into this, where the Fed certainly could make, there's a lot of belief they're going to go up just 0.25 basis points, and they're going to start to slow this thing down. I don't know. I don't know about that, because if they start reading some of these Facebook posts from agents, they're not going to be happy about multiple offers, but there's no inventory and there's no way to get it. What are you going to go convince somebody who's at 2.875% to put their house on the market, who has no intention of moving, loves their home? I mean, where are you getting the inventory from?
Well, you mentioned a good point earlier. I mean, if you want that inventory, everyone's a seller at a price, right? But if you're worried about inflation with housing prices and you go knock on someone's door, some of these people say, yeah, I want, and they give you some incredible number that probably won't appraise. So even if they're getting a mortgage, they might not be able to borrow the money. So you got to come in cash. And it's, you can think, all right, I'm going to be as aggressive as I want. Unless these people are motivated to move and have a place to go, which is the other rub here, the inventory is not going to come. And the boomers are really holding on here. I mean, you look at that they're just not liquidating their homes like a lot of people expected. Yeah. And because of that, and I don't blame them. I mean, you got a home at 2.875%, and it's usually like a health issue. There's maybe a spouse dies. There's my kids live in another state, or I'm moving closer to my family. That's the sellers that are coming to the market now, and I don't see that changing until, I mean, it's at some point it's going to flip. I don't see it happening anytime soon. I mean, even if we saw double the average turnover that we see every year, you're still not even close to that 4 million number.
At some point way down, you're talking maybe 10 years down, 10, 15 years away. Ivy Zellman says at some point when all that baby boomer inventory, all those houses come onto the market, and if we start actually building up to the rate that we're supposed to over the next 10, 15 years, that we're going to have an inventory issue, talking 10, 15 years down the road. I don't want to go crazy here. We got enough problems in 2023, but Ivy Zellman's pretty smart. She's predicted a lot as it relates to the housing market. And so interesting, but yeah, but boomers are, some of them are, listen, boomers are, it's what, like 70, 75 million people, 77 million, I think. And they control 1/7 of the world's wealth.
Yep.
So baby boomers just have so much money. They're sitting on 2 homes, right? And good for them. They've earned it. But yeah, that's definitely an issue as well, holding us back. Tom, what are you looking forward to most this week? What would be good news? Applications are up. I think they're going to continue to rise all spring. Okay, so mortgage applications are going to continue to rise unless rates get way out of control. We have builder sentiment up. We have buyer sentiment up. Consumer confidence is on the rise. All these things are happening. What would be, a healthy situation, and what can agents do to articulate this good news this week as we go into the end of January?
So the week ahead, what I would like to see, and would make me really happy, and then we'll see if I renew my week-to-week contract here with you. I would like to see housing inventory increase again. If we saw another 1,300, 1,500 homes, that would be tremendous. And
I'd like to see.
Agreed. I want to see more too.
4,000.
Yeah, I'd like to see way more than that. But if we can see something going in the right direction, and I equate this to something that I charted every single day for 2 months in 2020, showing time activity. I was watching that chart on showing time, and we just saw Pennsylvania cratering the entire time. And then all of a sudden you saw that little blip of showing activity going up. And then I knew, all right, we're coming out of this. If we can see that continue, and obviously the more time that goes by, the more you want to see an increase. But if we see a continued ascension of new homes hitting the market, so it's got to be more than 1,339. It's got to be more than that. I'd like to see, maybe a 10, 15, 20% increase on that. That's the direction that things need to go, and that will tell us where the market's heading. Because unfortunately, and if you're one of these people listening to the podcast, I'd love to hear your comments down below if you're having this conversation with sellers or not. Agents are still telling sellers, wait till the spring, wait till the grass goes green. And it's nonsense. This Super Bowl commentary, I've heard it for 21 years. The education that folks need is that there's opportunity in the market. The best time for you to have your home on the market is when the neighbors don't. And there are people that we know are going to sell this year. Your team's probably had conversations with them, Byron. I know our team has. Hey, have you thought about moving up your time frame to take advantage of market conditions and cash out high on your equity? That question needs to be asked to sellers right now. And if they can do it, and I've had some sellers do this. There's a gentleman I remember specifically. He had a big financial background. He sold his home last year, and he said, "I don't want to see if the market crashes." And it was right around this time last year. He's like, "I don't want to wait. I want to get out. I know where I'm going." And we ended up selling it above ask, still way higher than he expected. But the point was, he needed the guidance and someone to have an opinion. And too many realtors, they listen to whatever the client says and agree with them because they are desperate for business instead of actually giving them knowledge about the market. And that's why we're doing this show. And you've got to take that. If you're an agent and you want to go help some people, send that message to them. This is documented and proven. You can show them the stats. The best time to list is when your neighbors aren't on the market. You're going to be able to cash out higher, and you'll do better now than you will in May when you're competing with other folks that are waiting until the spring. It's that simple.
Yeah. The playbook's different right now, and you really got to track it on a day-to-day, week-to-week basis on what's happening because December and January are two completely different markets all of a sudden. So what information you might have been sending out there in December is now no longer relevant for a seller. It's a completely different market, completely different conversations. I'd be updating my verbiage and what I'm looking at every single week. Certainly if I'm listing, buying, selling, working with investors, whole different story, right? People that are looking for multifamily, they're going to see an abundance of inventory throughout this year. So totally different market over there as well. Share this pod. We've enjoyed doing it. I want to get Tom back he said, if we don't get some shares and some thumbs up on this one, he's not coming back. He's on a week-to-week contract with BAM for Knowledge Brokers Podcast. And I got to work hard this week negotiating for another 7-day deal. So share this podcast. Let them know that this thing is working.
All right. So on a light note here, we usually don't do this. Big game coming up Saturday night, Byron. We have the New York Football Giants.
I didn't know if you were going to bring it up.
I'm wearing my green shirt today to support my team.
Is it Saturday or Sunday?
Saturday night at 8:15. And
okay.
So the Knowledge Broker. So the spread is 7.5. What do you think here? Eagles clearly favored, by the way.
Yeah, Eagles are favored. Obviously, Tom being in Philadelphia is a huge Eagles fan, and I'm an enormous New York Football Giants fan. I'm taking the Giants. I'm taking the Giants with the points, to be clear. So if I'm a betting man, I would want those 7.5 points on my side because they're being offered. So you take those.
Well, that's what sellers should be doing. I'm going to tie this back in here. You don't want to gamble with your home sale. You've got an opportunity now to take the points and win outright, and that's what I'd be doing if I was a seller.
I think the Giants have a good chance of winning though. Danny Dimes looks great.
Yes.
This isn't Danny Deals. This is Danny Dimes.
Danny Deals, they'd be in some trouble. This is going to be, it's the NFC East. I love these New York, Philadelphia games. I got a lot of love for New York. I went to college up there. So I like the Eagles to win. I don't know if it's going to be by 7, but I like the Eagles to win and go on to the NFC Championship. So I'll be taking the money line. I think we need Eric Simon on this to help us explain how all this works. It's going to be a close game.
You staying home? What? It's a night game, huh?
Yeah. So we have our team holiday party at 6:00. It's over
terrible,
at 8.
Terrible planning.
It's not terrible planning because January is one of the worst months of the year socially to do anything. So it's cold, it's miserable. So it's not fun at all. But we will be going. I'm watching the game with my son. Actually, he begged me to watch it. First game he's watching, so I'm pretty excited about that. So we're going to be leaving the team party and going home to watch.
I might have a knowledge cigar.
Cigar.
And then next week we'll be back on here. Hopefully, I can be razzing you a little bit, and then I'm going to be in Philadelphia, so I'll be seeing you over there.
Yes.
So, all right, I really am enjoying doing this. It's keeping. I'm hoping it's keeping everybody informed on what's happening as it relates to housing. So again, whether it's a lender, an attorney, an appraiser, share this out to somebody in your network. Say, hey, what do you think about what's going on right now in housing? What are your thoughts on inventory? And love your thoughts in the comments as well. Tom, I'm sure I'll be texting with you all night, Saturday night. So
yes. Well, what I'll tell everyone here is
tomorrow night.
As much as we're having a little fun here about the football game, this message you have an obligation as a real estate agent to talk to your clients about this. You've got an obligation as a mortgage lender to give them the real knowledge that's out there, because there is too much noise. And the stuff we're talking about here, it's really going to help some people, and it's going to help consumers navigate everything that's going on. So if you're not, just take a listen. If you can get 1 or 2 talking points out of this to share with consumers, you're winning in the market and you're doing way better than the competition. And that's the value of this podcast. So I want everyone, I'd love everyone, if in the comments, maybe what are your 1 or 2 takeaways, and how are you going to help people with that over the next 7 days here? And maybe we can, if we're lucky enough, we get enough comments, we can run through some of this and see how it's working.
Knowledge.
Brokers.
Get that knowledge.